Is the market gonna crash? I don't know, but I can tell you one big thing. Our business has changed dramatically recently. We own 3 different businesses. We own wholesaling, fixing and flipping, and buying and holding, which are the only 3 ways to make money in real estate. And our fix and flip business has experienced a massive slowdown where normally we would take a house that we renovate, we put it on the market. My wife lists it as our real estate agent. Laura, go check out her YouTube channel if you guys want to see a hottie. She lists the property on the market, and for the last 2 years, we would on average get 40 offers on day 1. Our house would typically go $30,000, $40,000, $50,000 over what we were even asking for. It's been wild the last couple of years. Well, here's what's going on. Inventory on the MLS, or available properties to homeowners, have really risen. And now we're getting about 10 offers in the first 4 days. So it's been a dramatic slowdown. Do I see the market crashing? Not yet. I'll tell you what I think is going to cause the market to crash is interest rates continually climbing, and then the herd mentality of everybody starting to panic, and all the YouTubers and all the news outlets and all of the people starting to say, oh my gosh, the market is crashing, will essentially convince everybody to crash the market. This is actually a phenomenon. It happens every single market crash. I think that that is inevitable. I think that we're gonna have a dip, we're gonna have a pullback, we're gonna have all these things. So the question is, with the inevitable slowdown and the current slowdown of the market, what am I going to do in this market? What am I going to do to navigate? Well, here's the thing. I'm going to fix and flip a lot less. The number one group of people that got their asses handed to them in the real estate market in 2008, 2009, 2010 were people that were fixing and flipping. And why is that? It's because they bought a house for 200,000, put 40 or 50,000 into it, hoping to sell it for well above 300 grand and make a profit. But if you buy a house for 200 and during your renovation, the market crashes, you now have a really expensive short-term loan on this property that is interest only. Every single month, you got a payment, got a payment, got a payment, got a payment. And that property no longer is worth over 300. It's now worth 280, then 260, then 240. And by the time you renovate and put that property on the market, it's actually worth what you bought it for. So many people that are going out there building fix and flip businesses that have 10, 20, 30 employees, and they've got all these short-term loans. They're using credit cards and lines of credit and all this kind of stuff. They're over leveraged and they're susceptible to a market change. Fix and flippers were the number one subset group of real estate investors that got their asses handed to them in 2008, 2009, and 2010. So a smart move is that if you are active in fixing and flipping is pull back just a little bit. And the safe bet to do on fixing and flipping is look at the median household price in Phoenix, Arizona, or in your market. Literally Google it today. Household sale price in Colorado, average sale price in Los Angeles, California, average sales price in Missouri, Missoula, Montana, wherever it is, right? Orlando, Florida. Google it. In Arizona, our average sales price is $475,000. So what I want to do as a fix and flipper is that I'm not going to take on any projects that require me to sell my house after it's been renovated, anything over $475,000. Because what happens is the top line of the market gets hit first, right? The affordability spectrum on the other side, there's more buyers. Now what's happening is properties that we would have taken on a year ago that we could sell for 600, 700, when those opportunities come to us from other wholesalers or when we're cold calling homeowners and we find those opportunities, the answer is absolutely not. We are not taking on those projects. We are being very, very, very specific in what we're allowing into our pipeline. So now we're even inching downwards. My partners and I had a conversation yesterday that the average sales price in Arizona is 475. We are going to pretend that it's 440. We're going to take a very conservative approach, which means I've got to buy properties discounted from homeowners that are maybe in foreclosure, forbearance, bankruptcy, divorce, code violations, whatever, somewhere in the $200,000 range, then fix them up, put 50 to 75,000 into them and sell them on the market for around 400 grand max. I can still fix and flip in a down market. I just have to be very specific in what I allow in my pipeline so that I am not exposed to the part of the market that gets demolished during a downturn. Okay, so that's number one. Step number one, slow down on fix and flips. Number two, we are buying a lot of creative finance deals. Right now, I just got under contract a 40-unit multifamily, so apartment complex in San Angelo, Texas. The market rate in San Angelo, Texas is $1,300 for a 2-bedroom, 2-bath apartment. I am buying a a 40 unit that is 2-bed, 2-bath, and the rent rate in this apartment complex is $1,100. I'm acquiring this on seller finance, which means I don't have a loan. I don't have to put a big down payment down. I have really great terms associated with it, and the rent rate is under market value. So I can attract a lot of tenants and make sure that my occupancy is very low. Right now, the entire 40 unit apartment complex is rented out. That's a safe bet, because when people get their butts handed to them in an economic downturn, they lose their jobs, they sell their houses. Do you guys know that foreclosures are up 700% since January of this year? Guys, 700%. Foreclosures, people losing their house due to non-payment, are up 700% since January of this year. That's 6 months, a 7-fold number. That's scary. So when people are losing their home to foreclosure, where do they go? They run over to apartment complexes because it's affordable. They don't have pool maintenance. They don't have landscape maintenance. They don't have trash upkeep. They have less utilities they have to spend money on. And they start living in a lot safer, more affordable area. So I am acquiring, yes, I am still acquiring properties, even though the market is softening and maybe we'll even have a downturn. I will still buy properties that are focused on affordable housing, things that are under the average rent rate. So just like I told you in the fix and flip realm, okay? The fix and flip realm, find your median household sales price. So let's look at this. I'll show you how easy this is. Watch. Arizona, actually I'll say my county, Maricopa County, average home price, $475,000. So for you, that's how fast you can find what your average home is selling for in your area, right? In your county. If you are a fix and flipper, stay away from anything you would have to sell over that price, and you're gonna be a lot less exposed when the market turns. Number two, if you're acquiring rentals or Airbnbs, make sure you're looking at the average Airbnb in your area, the average rental in your area, and you are looking at things that are 10 or 15% below that. If they still cash flow, then those are safe bets. So for me, the deal in San Angelo, the rents haven't been raised in 4 years. I could actually buy that today, and I'll do a whole YouTube video on how I acquired it. I have the seller call recorded. I'll give that to you guys on the YouTube channel. I will then break down the whole entire deal, but when I buy it, I can now slowly start raising the rents because I bought something with below rent rates, and it keeps me safe. These are the things I'm focusing on. And so instead of me going out and attacking single family rentals right now, I'm starting to focus on multifamily rentals. And here's the third tip, okay? The third tip is, and the third thing I'm focusing on is, if I stay at 40 units or larger in the multifamily space, and all of the sudden 15% of my tenants lose their jobs because of some horrible downturn, or 20% of my tenants lose their job because of some horrible downturn, the reality is 20% of 40 is only 8. So I would still have 32 tenants in the San Angelo, Texas multifamily deal, 32 tenants shouldering the burden, making the payments, covering my mortgage, covering the utilities, the upkeep of the property. Yeah, my cash flow would be significantly damaged, but I would be able to still hold on to my property even during a downturn. Hopefully those 3 tips help you and tell you exactly, very specifically, what I will be doing over the next 12 to 24 months, depending on what happens with interest rates. If the interest rates come back down, you're gonna see the market accelerate again. But guys, the people that are saying that we're not having a downturn, they are obviously not in the real estate game. I am in the game. Our listings are taking longer to sell. It is starting to get scary. And so here are the things you need to work on. You need to work on learning how to comp properties and determine a good deal or a bad deal. You need to learn about creative finance, because this is the #1 time in the last 20 years where creative finance will dominate. If foreclosures are up 700%, that means subject to opportunities are also up 700%. If sellers' properties are not selling and they're taking longer to sell, now seller finance opportunities are up 700%. If wholesalers are having a hard time getting low ball numbers with sellers, novation agreements are up 700%. Hopefully this is helpful. Please give us a like and a subscribe. Make a comment down below, questions you have. And also, we've been thinking about doing a live show in the mornings talking about what's going on in the real estate market based on news, statistical data, and things that happened the day before, and helping you guys navigate how to get your next deal, your first deal, or even scale your real estate business in a downturn. We'll see you in the next video.